Hey traders, if this is your first time with us, my name is Shah Chowdhury and I would like to welcome you to our channel. However, if you're a repeated viewer, I thank you for your support and loyalty and hope you're getting educational value from my analysis. Today I will be taking you through a journey on how I use a process to identify trading opportunities on a daily basis. But before we begin, please take a second to subscribe to our channel and hit that bell notification. If you happen to enjoy this video, hit that like button also. It will show me your support. With that said, let's head over to the charts. Okay traders, I will be analysing today the pound yen and I am starting off on the daily time frame. Step 1 is to identify the bias, whether we are bullish or bearish. Clearly, from looking at this chart, we can identify that we have been making lower low, lower closes, which indicates we are bearish. What's interesting is where price is currently tested. We are at a support level where we have had multiple touches, and furthermore, if you look towards the right, you will notice that this support level is sitting on an even handle number. So we have identified we are bearish and currently testing a support level on the daily. Now traders, that we have identified that the market is bearish, let's predict where market is likely to go next. We already know market is testing the 136 even handle number, and two things we can expect to happen. Either the market goes straight down, breaking and closing below our support zone, not allowing us to get involved, or the market retraces, giving us an opportunity to short this market. If I see the market retracing, then I'm predicting price to go and test the 138 even handle number, where price found some resistance at this level. Technically, my previous outside return highlighted in the orange box will be my kill zone. Okay traders, I've dropped down to a lower time frame here, and it's one of my trading time frames. I'm going to be working from the 4 hour and the 1 hour and show you what's setting up on both, but I've drawn a couple of tools on this anyway. But before I move in, step 3 is deciding how to get involved. So we've gone through step 1, which was identifying your bias, whether you're bullish or bearish, and we determined that this pair is bearish. Step 2 was predicting where price was likely to go next, and I predicted the 13800s where price can go and find some resistance. And on the daily time frame, the outside return, I'm just going to quickly draw this in for you. The outside return is this zone right here. Okay, this zone right here. Now this zone is too big. If I was to short this right now, I'm not going to get a one-to-one risk reward, so I'm not interested in shorting this right this minute. I'm expecting price to push up a bit further, and I'm going to show you what I've actually gone and done. Okay, so I'm going to delete that zone here. I've reduced my kill zone to this orange box, and the way I've done that is I've taken a harmonic move. So we've got a harmonic move which lines up straight at this level. Okay, so 137.76, it completes at 137.76. More importantly, okay, we've got a 786 retracement of fib level. So what we're doing is we're building out confluence, okay, where price is likely to go and find some sort of resistance. So I took a retracement from this high to low, okay, and we had the 786 lining up right by our kill zone. Okay, so we've got the 786. I then done a fib extension from this leg, and guess what? Look, 127.2, 127.2 lines exactly up with the 786. Furthermore, I went and done a fib inversion from this leg of the move, and the 1414 lines up exactly. So we've got a cluster of fib levels at this level. Okay, so I'm expecting price to react at this level. So not only we've got fib retracement, fib extension, fib inversion, all fibs are lining up within my zone, just by my zone. Okay, now you can wait for price to go up to that level and perhaps give you a double top to short this pair, or maybe a candlestick pattern that you trade. Is completely down to you. But if I was to take this, and if I was looking for an aggressive entry, now I trade personally, one of my strategies are advanced patterns, and we have got an advanced pattern setting up here at this level as well. Okay, so we've got an advanced patterns completing at 137.73s. so this is going to be my X leg, X to A to B, B to C, and CD completion right up at 137.73s. Okay, so we've got a completion of a bearish Gartley. This is a Gartley formation. We've got a bearish Gartley forming at 137.73s. Now I'll be waiting for price to push slightly higher because I don't get that one-to-one risk reward just yet. About 2-3 pips higher, and I'll be entering this trade to the short side. Okay, now where my targets are going to go is going to be a fib retracement from A to D. Okay, so fib retracement A to D. I'm going to open 2 positions. One target will be at the 38.2. The second target I'll be taking at the 61.8. So let me draw this in for you traders, and you can clearly see where target goes. So the first target will be at 136.84s. Okay, and my secondary targets will be sitting at 136.28, and obviously my stop is going to go above X at the highs. Okay, so we've got quite a lot of confluence on this as well. We've got an advanced pattern setting up, so if price does push up there, I've got a trading opportunity to short this market. However, the other question is, what if price doesn't go up there? What if price finds resistance at this level, and it's been finding resistance at this level and it couldn't create a higher close, and you can clearly see that we've got a bit of a bearish divergence on my RSI. What if price decides to come down? Well, if we drop down to my hourly time frame, I'm going to remove all these drawing tools and give you a clear chart. Let's drop down to the hourly time frame, and I'll show you the other trading opportunity that I've got on the hourly. So this is the hourly time frame. Okay, and now we can see that the market has been consolidating for quite some time. Okay, it's been testing these highs on several occasions, and it's just been moving sideways. Now the question is, what if price doesn't go push up and decides to come back down again? Well, you've got another advanced pattern setting up, and we also know that 136, this is a level on the daily time frame where this has been chart has been the pound yen has been finding support. Okay, so at the 136 even handle number. So we've got our structure level here. So we've got another advanced pattern setting up, and I'm going to straight away draw this in for you guys. Okay, so we've got another bullish Gartley setting up on the hourly. So if price does come down, not violating our A leg, so if price doesn't go up and violate our A leg and price decides to come down, then you can clearly see that the 61.8 has been hit, which puts us on a Gartley formation. Okay, so if I draw my fib extension from A to B and back to A again, you'll see the 127.2 is lining up right by structure, which means you are going to be getting a better risk reward. So let's put the 127.2 on, take off the 1414. We don't really need that there, and you've got a bullish Gartley. If price does come down, you've got a bullish Gartley setting up nicely at 136.01s. So that's B to C and CD completion at 136.01s. once again, draw your fib levels for targets. Take it from A to D, and your target should be sitting at the 38.2 and the 61.8 if you take multiple targets. Okay, and your stop loss has to go below structure at X. So stop loss below X, the first target at 38.2, secondary target sitting at 136.83, which is 61.8. Last but not least, step 4 is pretty simple. It's actually to execute the trade if our analysis plays out. Okay, now traders, please do not trade the strategy I've just shown you blindly. You can follow the steps, and instead of using the Gartley, see if your strategy, which you should have back tested, plays out, giving you an opportunity to get involved. So just to recap, step 1 is to identify the market bias. Step 2 is to predict where market is likely to go next. Step 3 is decide how to get involved. So that's where your strategies come into play. And step 4 is execution. Okay, so we have identified 2 trading opportunities. If the market pushes up, we've got a bearish Gartley on the 4 hour. But if the market fails to push up and pushes down on the hourly time frame, we've got a bullish Gartley completing, giving us an opportunity to go long. Well traders, hope you got some value from this week's review, and if you did, please give me the thumbs up, and if you have any questions, leave a comment below and I promise I will reply. Until next time, hope you stay well and wish you a prosperous week in the markets.